Good morning, ladies and gentlemen. It's 10 o'clock. Welcome to the Somerset Council Pension Committee meeting on today, 13th of September. My name is Councillor Simon Coles and I have the privilege of chairing this committee. So welcome all, and we will start now. Are we recording on live? Yes, Debbie?
I will start recording as soon as you can.
We start recording? Excellent, thank you. Good morning and welcome everyone. This is a physical meeting with officers and others able to observe and participate virtually via Teams. Before we proceed, can I check that everybody in the room and online can hear the meeting?
Yes.
Yeah. Okay, excellent. When I invite somebody to speak, could you clearly state who you are for the benefit of anybody who is listening to the meeting so they can identify who is speaking? This meeting is being recorded and will be made available to view online. Can I also warmly welcome any members of the public and media who are joining us today. The agenda pack for this meeting is available via the ModGov app or directly from the council website via the link which was sent out last week. As agendas are now viewed electronically, could I kindly request that members and officers refer to page numbers from the published agenda pack to assist all present in finding the appropriate information. Thank you. Okay, moving on to the full agenda. Item 1, apologies for absence. Debbie, do we have any others other than Michael Dunk, who's on holiday?
No, that's the only apology.
Okay, thank you. Declarations of interest, members, committee members, are there any declarations that any of you wish to make that are not on our list? Not seeing anybody say that. Okay, thank you. The minutes of the previous meeting on the 14th of June, which are pages 9 to 14 of your pack. Is it your wish that I sign them as a accurate record of that meeting? It is. May I see a proposal for that, please? Thank you. And seconder, thank you. Vote, please. Going down. Lovely. I will sign those. Thank you. Thank you very much. Okay. Public question time. Debbie, do we have any public questions?
None have registered.
None have registered. Okay, thank you. Okay, item 5 then. It's the Independent Investment Advisors report to receive a verbal update on developments in the financial markets.
Morning, everybody.
Sorry, Caroline. My apologies. Good morning to you, Caroline. If you could present your report, it'd be lovely. Thank you.
I didn't produce a written document this time because I was travelling back through Europe over the past few days and I thought there was a fair chance that things would happen that I wouldn't know about. And I don't think that there would be a great deal more that I would have said than I'm going to say now anyway, because I don't think there's been very much change in the investment outlook since the last meeting. The US economy continues to expand. Every so often people have a wobble about maybe it's going to stop. I think it's likely that the Federal Reserve will cut interest rates sooner rather than it might have done with some of the recent data. But I think basically underneath it, the US economy is ploughing ahead on a quite satisfactory basis. Inflation has come down. And to have a market turn into a bad market with interest rates on the way down, it's just not something that happens. So I think it's possible to be quite comfortable about the US, in spite of the structural issues in the market about a very concentrated performance from a very small number of tech stocks. Europe's more problematical. It is very slow. The ECB have just cut rates. And it is staggering along, and the big problem for Europe is that the German economy is a real mess. It's been dependent on selling cars to the Chinese produced with cheap Russian gas. That's all gone. It has a sharply declining population, and it has stayed with basically industries that are now old-fashioned. It hasn't digitized very much. You know, we all think of Germany, I think, as a sort of terribly efficient place. Their infrastructure is now such a mess that the Swiss have banned German trains from crossing the border because they were all coming in so late it was ruining the regularity of Swiss rail. But I think Europe will stagger along. I don't think we're going into a major bear market. But it is a difficult environment. The real difficult one is China, which is doing nothing at all to sort out the problems of an overbuilt and house market with prices collapsing. I mean, house prices in China are down 25 to 30% from their peak. Youth unemployment is quite high. They have the same issues about declining population. And of course, there is no social security structure in China. So what you have now is many young people looking at supporting themselves or grandparents, possibly even great-grandparents. In that environment, they're not going to start rushing out and have children. And they might want to think about it. They're going to wonder who's going to pay for them. So I think China will continue to be a drag on the world for the foreseeable future. And I think many investors too have decided that the political interference in corporate life in China has got to a point that you don't know what you're buying into. So that's my sort of broad brush view of the world. I'd be very happy to take any questions that people have. I have some other comments that I would be wanting to make that are more about this fund and the management of this fund, but I think that there are items going to come on the agenda later on where those comments will be more useful and more relevant. Unless people would like me to talk now, I'm always happy to do.
Okay, well, I've got a question before I bring John Cook-Wilburn in. The one area you didn't mention was India and their emerging economy. I wonder whether you had a view on that currently.
I think India is a very interesting opportunity, and it is at least a much more democratic society than China, and at least everybody gets to have a vote. Though Mr. Modi is doing his best to make it rather less democratic, I think it has got an expanding population. It's got well-educated workforce. I think in the long term, it's possible to be quite positive about India. But I wouldn't say that at current valuations, I would be rushing out and saying India is where you must buy.
Okay, thank you. Thank you for that. John?
Thank you. Yeah, I think if we think the adult social care is a problem, I think China's going to really get that stops in some time. But my question is about the Japanese economy you mentioned. They raised interest rates for the first time for a long time a while ago, and that disturbed the sort of cash and carry trade of dollars to America, the bond trade. Is that over now, or do you expect that to carry on?
I think that is over. I mean, it's very interesting that when the Japanese raised interest rates and we had the market set back, we had all kinds of punditry about how this was the end of the world, terrible things were going to happen, and bear markets were going to do this, that, and the other. Or did we have a technical situation with a few hedge funds, which sorted itself out over really quite a short time? I think that particular trade has ended, but I do think on a broader basis, we are, for the longer term, in markets where hedge fund trades that have to be unwound quickly will create pockets of air from time to time. And the important thing is not to be too phased by them, unless you're a fund that has to do the unwinding, of course, which you would not be.
Okay, Councillor Parmar.
Thank you, Caroline. I find that very interesting, but you haven't actually referred to the wars that we have in Middle East and Ukraine and the repercussion or the implications of that for the marketplace, especially with commodities like oil and gas and that sort. And then the other thing is, what I like to find out is the lessons that can be learned from Germany and China that we can actually avoid here in UK and potentially in Somerset.
I think with the wars, it's quite difficult to say anything very concrete about them. I think the main lesson, if you look globally over a rather longer time period, is that markets tend to have discounted wars that they know are going on because they can see what. I mean, if Russia suddenly decides it's actually going to do one of its threats and bomb us all out of existence with nuclear weapons, then all bets are off. My own feeling is that most of that is is posturing for their own domestic market as much as anything else.
This is about, yeah.
And, you know, one can never rule out gross stupidity.
No.
Yes, the Red Sea is causing problems at the moment for people bringing in goods that they're now having to take around the Cape. So you've got some price pressure there. But if you look at what's happening with oil prices have been going nowhere for some time now. And that's not just because of the embargo on Russian oil. So I think it is best to try, and as the slogan says, keep calm and carry on about war. The demographic problem is more difficult because you can't create labour. I mean, the Japanese, who went to this problem with ageing populations earlier than the rest of us, have tried all kinds of things using robots for social care and things like that. At the margin, it does some good. Yes, you can do things with automation. I don't think any of the kind of plans that get produced every so often to say, oh, let's do this, that, and the other, and women will have more babies. I don't think so. So longer term, for the West, the answer will have to be imported labour, because if you need labour and you're not producing your own, you have to buy it from somewhere else. And that has a lot of social issues and a lot of management issues. But it has to be the answer.
Okay, thank you. Debbie Fothergill, please.
Thank you very much. So somebody that went to Japan earlier this year, I was astonished that virtually every taxi driver was aged over 80. The number of older people that are still in the labour market is just astonishing. That was my point. The point was about Russia. Everything I read on Russia is that because it's moved to a war economy, and that's supporting the GDP within Russia, which is actually growing. But the problem for Russia and the rest of the world will be when the war stops, which we hope it will, absolutely. When it stops, Russia won't have replaced all that war economy with their market economy, and therefore that's when things will really crash in Russia and the market. So at the moment, it's stable because of that war economy footing. They've all moved over producing tanks and things, sadly. But when that stops, then that will have the effect on the world economy, is what I'm reading.
It will have an impact, but I think it will be reasonably small, because that is all a domestically circulated problem. I mean, the Russians are still unfortunately managing to get hold of Western semiconductors and things like that, which they need. But if they don't want to have domestic revolt, when they come off the war economy, they're going to have to give a huge boost to try and get domestic consumption going. That will be inflationary. On the other hand, it may be that they will be at that point starting to be able to sell oil to people other than China and India and at market prices, which will help. But no, there's a real question of how if you're the government there. I don't think Putin thinks about this kind of thing. But if you are a more sensible government there, you would be saying, right, how do we get domestic demand going again?
Okay, any more questions for Caroline at this point? Not saying online.
No.
Okay, thank you, Caroline. That's as ever very, very informative and very interesting.
It's a pleasure to be here again.
We're delighted to see you, and glad the train journey across Europe wasn't quite as bad as you had anticipated. Item 6 on our agenda, which is a review of our investment performance, which are pages 15 to 40, and it's our funds investment manager, Anton Sweet. Anton.
Good morning, everyone. As is my usual practice with this paper, I'm going to talk briefly to the combined fund results, so starting on page 33, but I'm always happy to take questions on anything in the paper. Investment returns in the quarter to June were acceptable. Effectively, 1.3% is just above the level that the actuary has assumed and is in our targets, and so it's absolutely fine. It's not staggering. It's not, but it's not in any way bad. what we are seeing in markets is quite a lot of volatility and not a lot of forward motion. So in any given quarter, you seem to have a couple of months where things are okay, and then one month that sort of takes away half of what the okay was. And I don't know whether it's what markets are really waiting for. Looking at Caroline slightly, and I'm not sure markets know what they're really waiting for, other than the next Nvidia results. And again, just to give some flavour, returns since June have continued that pattern. July and August was sort of all right-ish in a very sort of muted way. October to date, it's been a bit of a car crash. I think we've got an okay chance of just sort of continuing to nudge along until 31st of March, which is when the next valuation sort of kicks in from the actuary. So that's sort of our very short-term sort of target, is to sort of get there without too much disruption. But it is a bit, it's all a bit undirectional at the moment. In terms of our performance generally, we underperformed against our benchmark. At the moment, our main issue really is the underperformance of the Brunel's Global High Alpha portfolio, because that's by far our largest exposure, and therefore any outperformance or underperformance on that particular fund has a most noticeable impact on us. And there are some sort of, there's 5 fund managers underlying within that, and so there are a variety of how well they're doing. One is a manager called Alliance Bernstein that frankly haven't been doing very well, and I think Brunel need to be very conscious of that, and I'm certainly pushing for them to resolve something of that. Another underperforming manager in that portfolio is a company called Harris. Harris have a very, very value-oriented style, and they've performed very well for a value manager, but value has not been rewarded for the last 3 years, so they've underperformed. The other 3 fund managers in that portfolio have done reasonably well. So, and that was all I was going to say about the performance. Particularly, the 1 year performance actually has been very good. 12.7% is very strong. And as I say, that 3 year number, although it's a rolling 3 years, it's pretty much bang in line with what the actuary wants to see. And that is reinforced in the graph in 16.6 on page 35, where you can see that we are just above, but pretty much in line with that target line. I'll pause there before I go on to some other matters regarding Brunel, because also I'm aware Caroline wants to make some comments about performance.
Okay, please, Caroline.
I just wanted to say, and this really is more perhaps coming on to the discussion later about where things go, that the evidence to me is that while Brunel have not done anything terrible, their performance as a selector of fund managers, which is what they are, doesn't seem to me to be delivering anything more than was delivered in the past. That the ups and downs, they haven't done better, in my opinion, than the previous kind of regimes where either councils were making absolutely their own decisions, or in some cases where they were being guided very much by the investment consultants. So I think in any sort of discussion of where things are going, where things have gone, yes, I think pooling has probably given you some cost reductions. But in terms of improving the efficiency of manager selection, I feel that that has been delivered.
Okay, so,
May I just ask a question?
yeah, of
Caroline?
course.
Of what, I know you're on a couple of other local government funds and you're probably more aware or pay more attention to the other pools than I do. Do you have an opinion as to where Brunel stacks up against the other pools?
Thank you.
I don't have enough data to give a big picture, but I would have said probably no better, no worse. I mean, I think this is an issue for the pooling of venture as a whole. That one of the bases for doing it was supposed to be that creating these pools would create better professionalism at the level of manager selection, and that I don't think has happened.
Okay, just before I bring Councillor Cookwood and Councillor Seeb in, our exposure to the global high alpha and your comments about this, because what I've noticed is that the only thing we are gaining in any form is a reduction in costs. Now, that is of course very welcome, but that's only just come about now. Up to now, it's been a costly exercise. Now it is just starting to produce the economies that we thought were coming, and I'm very grateful to see them. So I remain concerned that A, we're quite exposed to this, and B, that we have a new government which is following on from the previous government, saying they would like to see pension funds used in alternative ways. And I'm very concerned that we are looking at a position where we could find ourselves being requested to have yet another reorganisation and the add-on costs that that will bring, just as we are starting to see some gains from the previous one. And also, my personal view is that 4 large funds for the UK, East, West, North and South, is not the way to keep localised benefits going. So I have grave concerns about that and how that's going to be structured, particularly as we have only just started this year to see the benefits from the Brunel partnership. I take on board your comments about the professionalism upgrade that we were all hoping to see. I'm now going to open it up. It's John Cookwood first, followed by Peter Seeb, please. John.
Yeah, no, I was just going to ask the question about the choice of fund managers, etc. Because with our risk profile, we don't, you know, we haven't got a great deal of spread, I'd imagine, to go very far. Because with our conservative risk profile, that we would be obviously be investing in certain areas that suit that risk profile, and it's a very conservative risk profile, which is correct. So I just wonder how much scope there is for improvement, seeing as the markets we've invested in would be the same because of our risk profile. Or have I got this? Am I a bit out there?
I'll start. So yes, our risk profile is what it is. And obviously that's a discussion we will have at various points in the future. We are where we are, as they say. You know, the government said thou shalt pool. So we've done what we've been told to do. We've been nice people. Has it benefited us? Moot point. And certainly in terms of investment performance, whilst Brunel isn't doing significantly well, such that we can just hang our hats on it and say, yes, Brunel is wonderful, it's impossible for us to say that had the previous arrangement stayed in place, we would have done better, because you can't do that calculation. It's just not possible. It's bad enough doing the fees calculations, which have some assumptions involved in them. So we are where we are. It's Brunel's choice around the underlying fund managers. But as officers, we meet with Brunel regularly. We specifically review the work they do on the investment funds quarterly. We sit in a room, like this, round the table. They bring in their own people who manage the underlying stuff, and we harangue them for all we're worth if we don't think they're doing well. So where we think that performance is poor and that they should be considering changes, we are certainly putting that pressure on them. And I wouldn't expect them to. They should be their own people. They should respond to that pressure professionally and take it on board, but it is their decision. And so those processes are happening. We're trying to make the best of it we can, I suppose is what I'm saying. But it is what it is. I'm not sure if that's really answered your question, but I'm
Not really, no. My question was, is there scope within our risk profile if we changed fund managers to a better return for performing fund managers, if you like? Is that realistic within our risk profile, or because we have a conservative risk profile, so we will be investing in those quite very conservative environments. So whether it's one fund manager or another fund manager, it's not going to really make that much difference. Whereas if you had a high risk profile, your fund manager performance would be much more volatile. That's all I'm saying. That's so the scope of volatility within our risk profile is surely small.
Yes. So by far the most important part of our return is what we choose to invest in. So if we choose to invest in global stock markets, which is what the Global High Alpha portfolio does, it invests specifically in what I've referred to as developed markets, that portfolio, as opposed to the emerging markets portfolio, which does emerging markets. So the vast majority of those return, if the US stock market goes up 20%, we're likely to be somewhere between 19 and 21%. If the US stock market goes down by 20%, the same.
It's the difference in fund managers.
Yeah.
I'm talking
So the difference in the fund manager you pick, yes, you dearly hope you pick well. Yes, you dearly hope that they add value over time. And the problem Brunel have got is that within the 3-year track record of pretty much every portfolio they have, is the period at the start of 2022 where Russia invaded Ukraine. Commodities and particularly oil and gas prices rocketed. Oil and gas stocks did really well. Because of their ESG stance, we're underweight exposure to that area. And so all of their fund managers pretty much underperformed in that 6 months. And until you take that 6 months out of the record, because it's long enough ago, their numbers ain't going to look great. If you,
Nor will anybody else's.
or nor will anyone else's who took that stance.
Yes.
And that's just one of those things that you sort of have to accept. That's a decision you took, and it's the. When we get to the period where that drops out, so about a year's time, I think most of Brunel's portfolios at that time will be on a 3-year basis, fractionally above benchmark, assuming they have a reasonable next 6 months. And so they'll be okay. But that period does make them look very poor. And I suppose the counterpoint to that is we haven't yet had a period, although we might be entering one, where oil prices and therefore the profits to those companies are poor or falling, which, irrespective of anything else, will make their relative performance look a lot better. So, yeah. But the most important thing is what areas we choose to invest in. Then the fund managers you pick sort of just hopefully add a bit, but it's a relatively small bit. The main majority comes from what In markets, they refer to as beta, which is the market performance.
Caroline.
If you look at what Brunel and the other pools are doing, they are designing a product to give a certain result, and you have your global high alpha, and they put a mixture of managers in there with different styles who should over the cycle perform at different times, so that you end up with a blended result, which is the result you want. But it then comes back underneath it to, are the people they are picking good in their style? I mean, Anton has mentioned Harris Associates. They haven't done well against indices, but as a value manager, they haven't done too badly. Now, do you want to put a value manager in the blend, or you say, no, we'll just go 100% for growth and just go for the growthiest managers we can find? That's the decision that Brunel make when they do their pick and mix.
Yeah.
So the challenge to them has to be below the level of what the fund as a whole has produced, and to, is your pick and mix right? Or are you carrying a passenger somewhere in there?
Okay.
And inevitably, there are some passengers. One of the things I say in my conversations with Brunel is that we all accept that sort of short-term churn of fund managers, sort of, oh, you've had 2 bad quarters, out you get, and well, it doesn't work. There is just masses of empirical evidence on that. Typically, because what you do is you just sack an underperforming manager just before they have a good period, and you hire a new manager who's just had a good period just before they have a bad one. So we're very conscious of that and very keen to avoid that. Also, I quite like a theory of, what is your worst problem? What is the manager you think is really damaging you, almost irrespective of which portfolio it's in? Deal with that one. Deal with one problem at a time, and then move on. Because if you start trying to do lots of manager changes, or of course, again, you lose focus on what you're doing. So focus on solving one problem, and then move on. And I'm aware of action being taken in one portfolio, but I need to be very careful of what I say because it's not in the public domain.
Okay. I think as a comment on all of that, which I think is perfectly reasonable, is by nature we are relatively conservative in our choices because our underlying aim and the whole point of us being here is to ensure that we can pay the pensions to our members. So we have to be relatively conservative in our outlook rather than chasing a wild rise in one market or another. So with that on board, keeping around the kind of returns and the kind of levels that we expect, and I take Anton's point that you have a fund manager that's doing particularly well, and then they don't do particularly well for 3 months, and they come back again later in the cycle. So I think overall we're looking at something that is relatively conservative, but for the, I think, the right reasons for ensuring that we can pay all the pensions. And that, of course, is important. And then we start looking at, do we tinker at the edges and whether or not we should be doing that. And that, of course, is, you can always chase a rising market or a falling market to try and make some money. But very few people do it successfully, consistently, would be my comment. I'm going to move on to the councillors wishing to comment now. And Peter C, followed by Councillor Farberhigh, please.
Thank you. I've been listening to this with some interest, and I'm not actively disagreeing with the comments, but I have to point out the data set from which we're making the observations is itself an influenced one. So if, for example, you look at the Brunel Oversight Board quarterly report, you have useful breakdowns of each fund, where the sectors that fund's in, how that sector against the benchmark has performed, and in, particularly the active underweights, the stocks which with hindsight would have let us do better. And I think it's really well worth highlighting the point which Caroline made about the US economy being dominated by a very small group of extremely high, large organizations such as NVIDIA, Apple, Microsoft, and Meta. So if you have a look at the benchmark, it's got a lot more in those stocks than we've got. That might be an investment manager question because I don't think we've actively interfered in that point. Whereas if you have a look at some of the other funds where we're underperforming, the big names we are not exposed to and thus not getting the growth from are things like the China National Bank. To a lesser extent, I think we've got some HSBC exposure. Shell is an obvious out of weight investment in one of the funds. And these are areas where we have made policy decisions.
Yes.
So we are choosing over and above the actual performance choices to make political choices to move in a particular direction. And we need that getting into there. The other thing which I'm conscious of is that, again, if you go to the investment profiles across the different funds which are operating through Brunel, we've got a very odd profile. So, for example, the number of our legacy investments which remain in our portfolio is extremely low. There are two authorities with a low proportion of legacy investments. And logically, your legacy investment would only be there if the fund manager thinks it's still worth having. So we have been actively moved out of that area, probably indicating that, well, undermining a case to say that the old was as good as the new, I suppose, for us, whereas in other funds, there is still quite a strong legacy in there, given the length of time that the fund has been managed externally. So I just think it's you've got to be a little bit careful about the data you're reading the conclusions from, as well as the conclusions. I think the case has been made for the conclusions given the data, but the data set itself may have issues.
I'm just going to pick up the legacy point there. So there's two reasons why various funds have legacy portfolios. And I don't think either of them are anything to do with performance. The first is that if it's a illiquid asset, such as ours, private equity, the natural best solution with that is for it to run off naturally over time. So we haven't said that Neuberger are doing much better than Brunel or not. In fact, Neuberger are now a significant influence on Brunel's private equity portfolios. So we're almost back where we started, which is ironic. So that's just a natural allowing, and we probably had a slightly smaller level of private markets exposure than the average across the Brunel group, and continue to do so. I think it's fair to say, without no names, no pack drills, that some of the funds in Brunel have been more reluctant to pass money across to Brunel, not particularly for performance reasons. They're just more reluctant to. And so some of us have got to the point where we are now quicker. The government's very clear. They expect everyone to have moved all of their listed market assets to their pool by 31st of March 2025. We completed that process in 2021. So but nationally, I mean, even within Brunel, you look at the level of legacy assets within Brunel, actually, it's very low compared to a couple of the other pools. Yes. So a lot of that is more about how individual funds wish to react to the government's encouragement, we'll call it, to pool. Rather than really, I don't think it's got anything to do with performance at all. I really don't.
Okay, Councillor Farberhide, please.
Thank you. My question is actually both to Caroline and Anton. I would seek your views on this. With the new government, the National Wealth being utilised in future potentially and being more liberal with it by supporting industries of future, can pooling some assets Council be aligned with those growth industries in the West Country? Can we look at that? Is that a possibility or not?
The problem, and I think this goes beyond your question to a more general thing about the government's aim, is that it's not that these assets are out there and people are not investing in them. It is that on the whole they don't exist. Or if they do exist, they are at a stage in their development where they are non-income producing and quite high risk, and therefore would not seem to be appropriate investments for pension funds, though they might be for a sovereign wealth fund. And there is this problem to my mind that the government keeps talking about investment in the UK. Well, we don't invest in the UK, we invest in stocks, shares, infrastructure, property. I think people have been saying to the government for years, look, it is not that we are sitting there saying we refuse to invest in these things that are out there. The question is, where are the investments that could reasonably be made?
Supply and demand. If there's good investments to be had, effectively, this is what we hire professional fund managers to do, to make a judgment as to which are the best investments. And we should be, in theory, agnostic as to where they are. I appreciate there's a risk and reward thing, because the less developed a country is in terms of its legal and structures, etc., the more risk in investing in there. So there's an inherent greater risk to invest in China or India than the UK or US because of the legal structures and the protections to shareholders, etc., So you would expect more return to compensate for that risk. But at the end of the day, if the UK produces excellent investments, then our fund managers will steer us towards them. And not only our fund managers, but all fund managers globally, trillions and trillions of dollars. If there's not the opportunities, no one will bother. And at the moment, we're investing in, or I hope we're investing in the best opportunities that the UK offers. And that's all that we should ever want to do.
Okay. Any questions on that?
I had a comment about why things haven't happened in the UK. I mean, if you look at a lot of the global infrastructure funds used to have investments in the UK because of erratic regulation and awkward profit profiles. A lot of those funds have just, I've had it said to me, we will not invest in the UK anymore. It's too difficult. And somebody was talking to me about investing in power in the US. And he said, yes, in the US, power is regulated at the state level. There are very tough regulators. We have to abide by what they want. But in the US, people accept that if you want people to invest in their power structures, you have to allow them to earn a reasonable rate of return. So we go to the US, we've given up on the UK.
And as a perfect example of that, those global infrastructure funds heavily own UK water. And right now they're bashing their head against the wall and saying, why on earth did we bother? Because the profit profile they thought they were being promised has been taken away.
Okay, Paul.
Just want to make an observation, really, like Councillor Seaver, I was listening with interest, and we already struggle, don't we, in terms of our aspiration for return against our underlying understanding of conservatism, caution, and our responsibilities, etc. I think that's laid on top of a market that's been very, very flat for quite a time now. And I think that's probably tempered our expectation. It's really hard for us to judge how well we're performing. Even our benchmarks are quite a struggle. You know, we look at the graphs and then we explain away the performance around time lag and other factors that we all understand. I'm not convinced that when I was in local government and looking at fund performance 30 years ago, we were quite so laid back. I think expectation has just been mellowed and that we accept very much where we are. I think the market has moved from where it moved to in 2008 and we're going to have to adjust to that. But it's not now because the market's not stabilised, but I do think the pension funds and our pension fund will need to relook at what our expectation and risk profile is. Because as Anton says, essentially, we're on a line.
Yeah.
We almost might as well just buy a tracker and it will tweak up and down and we'll probably explain away the downs because of things that happen globally and the ups sort of compensate and they're great when they happen. But I just think we've become too hands-off and it's something we're going to have to look at if we're going to meet the expectation of our pensioners.
I mean, I'll just make some general points on that. I mean, the thing that I think is important largely is table 16.5 on page 34, I think it is. Yeah. And that's where it says, actually, what have we done over 10 years? And that's an 8% return every year for 10 years on average. And that's absolutely fine. That's well in front of inflation. We've made a proper return that is supporting the finances of the fund. And actually, those are the numbers that really count, are 10 and 20 year numbers, because that's the time horizon we should be thinking about, and that's fine. I mean, the change in attitude versus the past, I think, one, you tend to be a product of what's recently happened. So at the end of the 80s, stock markets had boomed for most of the decade, and everyone thought making money out of the stock market was easy, and 15% returns were regular. Although you have to remember that inflation was much higher in those times, so inflation-adjusted returns weren't quite as great as they perhaps look. And Caroline may be better placed to comment on this because, no disrespect to you were in the markets a bit earlier than I were. One of the other things that's changed, I know, harsh, is that one of the ways that you get outperformance is to have an information advantage. To get an information advantage in the 80s tended to mean that you met a lot of people. You had a good network to learn things that weren't hidden from the public, but weren't expressly said. That is now really, really hard. To get an information advantage now, it's really, really difficult. Partly because the internet makes the same information available to everyone, and partly because market rules on insider information and trading has made it more difficult for companies to be open with individuals as opposed to with everyone. And so the market has changed, and the ability for fund managers generally to do well, I think is harder now. I'm not saying they can't do it. I think it is harder now than it was 20 years ago. Personal opinion.
Thank you, Caroline.
I think it is harder, but I wouldn't put it down quite so much to the information thing as to the discovery of risk management. When I was a baby fund manager back in the 80s, the 70s even, nobody talked about risk at all. You just went out and tried to get the best return you could. Now, every investment manager has a huge risk management department, measuring portfolios, going on a day-to-day basis, saying to people, you're taking too much risk, or you're not taking enough risk, but very much focused on what the particular product they're selling is, and what its risk profile is supposed to look like. So if you've got a fund with a middle of the road objective, you're not going to see it suddenly shooting the lights out. And that will not be to do with the fund manager failing to spot opportunities. It will be to do with the risk model people saying you can't do that.
I heartily agree on that point. As someone who started his career in theory, is doing an undergrad degree in accounting and financial analysis, I spent 3 years studying all the models that they constantly use, and I don't think they really prove or help anything at all.
Okay, I think that's a note to move on. We'll take that opportunity. I can't see anybody else asking. There's nobody online wishing to raise a question I can see. In that case, thank you for that. Anything else you wanted to bring out of your report?
Just within that paper, it's as a convenient place in the agenda to raise it as any, so it's in this paper. Councillor Seed has been our representative on the Brunel Oversight Board. Due to other commitments, he's found that difficult to do, to give it his full attention, and so he would like to pass the baton to someone else. So preferably we'd like a volunteer to sit on the Brunel Oversight Board. It is typically 4 meetings a year. They're typically on a Thursday morning. And
Bristol.
They are in Bristol, but the majority of people join them remotely. There's usually the Brunel officers and 4 or 5 people in Bristol who happen to be relatively local to Bristol.
Okay, well, I'm not overwhelmed with offers, so I guess that that probably means it falls to me. So I
magnanimous of you, Chair.
Yes, thank you.
All those in favour?
A unanimous decision. Thank you all so much. Peter, I'd like to thank you for all your efforts, and can we have a conversation off face, please?
I'd just like to say, that when I took the obligation on, I hadn't realised I had a reorganisation within my day job, which placed that meeting straight in conflict with another one that's absolutely essential. So I've been following the paperwork and commenting by email, but not being able to participate in the meetings.
I have to say, if it starts to become meetings fall on a Tuesday, I won't be able to do it. So
they are very consistently Thursday mornings.
Oh, that's good. Okay, thank you. More light reading in the evenings. Okay, is there anything else you'd like to bring up on? Sorry, is there anything else you'd like to bring up on your report, Anton?
No, unless now that we've completed members' questions.
No. Okay, no further questions from anybody? No. Okay. In that case, we'll move on, please, to agenda item 7, which is pages 41 to 48.
And Sander Thompson is online from Peninsula, who's going to pick up this item.
Yep, good morning, thank you. Hopefully everyone can hear me.
Yeah, yes, we can.
Double check that first. Lovely, wonderful. Okay. Yeah, just by way of background, first of all, obviously we Peninsula Pensions monitor the performance against the disclosure of information regulations, which set out the statutory requirements regarding disclosure of pension information. In addition, we also use some of our internal sort of targets outlined in the pension administration strategy. Performance targets are monitored via the task system that we used and an internal reporting tool, which is the Altair system provided by Hayward Pension Technologies. And this report encompasses also an update on the employer bodies covered by the fund. So I'll jump straight to the administration team performance, some high-level summaries, if you like. Excuse me. Total performance against the disclosure regulations for the first quarter ending 30th of June was 91% overall. Which I don't know what page that is with your reports. It's page 4 on mine. I don't know if you want me to share my screen, if that would be of more use.
41 seems to be the consensus.
41 for the appendix 1. Yeah.
I was looking at the chart on page 4. Anyway.
Obviously, during the first quarter as well, we received 27 compliments, which is nice. We also record the complaints, so the compliments also get recorded alongside those. So hopefully the compliments outnumber the complaints, which they did for this quarter, which is always nice. So Appendix 1, let's just focus on that for a few moments. There's sort of a detailed breakdown of the administration performance for the period we've mentioned. Just want to sort of focus on the average sort of numbers there that we produce at the top of that appendix. The total number of days from member retirement to the date of payment processed is 40 days, which sounds like a lot, but there are a couple of things to sort of take into note there. So the number of days, often the employers provide us with the information after the members sort of leave. So on average, that can be up to 7 days. The number of days that members then take sort of make the decision can be 23 days. So the two together is where we're getting the 40 days from. But within that, there's obviously some nuances. 23% of the time we find that retirement notifications are received in advance of retirements, which is great. That helps us do it faster. Unfortunately, 32% of retirement notifications are received more than a month after the retirement date's already happened. So of course, there we're sort of chasing our tails a bit. But in spite of that, the performance summary overall is sort of 91% across the three areas for the high, medium, and low priorities. The low priorities have dropped off a bit, but we can explain that if we looked at the chart. Again, I'm not sure what page it is for you guys, but there's a chart sort of further down on what I've got as page 6 here, which shows that the sort of low priority performance continues in line with the other sort of medium and high priorities up until about September, December time in 2023, and we did sort of have a small sort of office reorganisation at that point. We're also missing a few of our sort of lower scaled employees, sort of natural wastage and people choosing to leave. So we had some recruitment there to fill those gaps. So it took us a bit longer to get those numbers back up again. So that sort of explains that. Yeah, we can draw our attention to the internal sort of targets, the 10 days of reporting. So the high priority cases, you'll probably note that the retirements for actives and deferreds, whilst for the disclosure regs, it's 95 and 97% respectively. In terms of the 10-day target, it drops to 84 and 86%. And as we've already sort of discussed, 32% of those retirement notifications are coming in a month later than the actual retirement date's already taken place. So it's very difficult to sort of meet a 10-day target in that sort of time frame when you're sort of chasing the tail, as it were. So those are the sort of high-level numbers that I wanted to draw people's attention to. If we sort of focus on Appendix 2 for a moment, which I've got on page, is it for me? 4 of 8, I believe, so halfway through.
Appendix B on page 47 in the pack.
Thank you. We've just got there a sort of summary of the longer sort of tracked work in terms of what's been created, completed and remaining. So they look fairly static there, but if we could sort of extend that back a bit, you'll sort of notice that the workload is increasing, which is sort of seen in the table below in terms of the remaining work status. There has been a sort of a jump there in March that'll sort of leap out at people. That's often due to things like March is the end of that sort of financial year, so we get annual returns from employers, all employers coming in, and we've got to sort of go through that data and load it onto the system. We tend to do the sort of annual, what we call 5-year refund exercise there, where we sort of move those sort of payments around as well, just to sort of tidy them up. And all the leavers and starters notifications from the annual returns often have feed-on implications into other sort of cases, sort of like amalgamations and refunds. So there's a bit of normally a peak at that time of year. Anyway, so those are the sort of points I wanted to draw out there. If we look at the sort of complaints, again on page 6, just above the table about the high and medium and low priorities tracking. First instance complaint, these are sort of informal member complaints with the aim of resolving it prior to it going to an informal internal disputes resolution procedure, the IDRPs. These are generally raised to the member self-service portal. So out of the 11 complaints received in the last quarter, 10 were complaints relating to administration. None of the complaints were upheld. So you can see there that 7 were relating to the timescales around various types of calculations. 2 referred to employers where they've supplied information late. There's obviously one that I want to draw attention to in terms of potential transfer outs. These are, I'm sure people can track from the press often gets updated in terms of scams and things that are about. So we have tightened our procedures up a lot on this. So despite the warnings that we provide, I think in this case the transfer didn't proceed, but the member wasn't happy that we appear to be providing them with additional warnings, which is what the legislation sort of now, or certainly the TPR's guidance now requires that we do, just to make sure that members are absolutely sure. We did have one IDRP, internal disputes resolution procedure. It was relating to an ill health decision. There was a review requested by the member for the employer that made that decision. So that's a summary of the complaints. If we're moving on, did mention that we had that sort of increased workload. So if we focus on Appendix 3, which I think is the very last page of the report, it's very much sort of more evident there in terms of the increasing workflow. So we've had more work created. We are managing to complete an awful lot of work as well. So if you sort of like to look at that, we're sort of treading water, if you like, and able to absorb that increased workload for the moment. But yes, there is a sort of much more increased demand on the service at the moment, and this is driven by a number of things. One of them, no doubt as you're aware, is the McLeod exercise that's going on, which we'll come on to in a moment. If we just briefly look at the employer updates, we've got some admittee bodies that have joined, some new academies that have joined, and one cessation that we'll note from there. Other issues that I sort of mentioned previously was the McLeod exercise that's going on. We're sort of continuing to work on the implementation of that remedy and make sure that our records are as up to date as possible. That's been a sort of huge undertaking with the software suppliers, given the sort of late publication of the legislation last September, I believe, if I can remember now. Seems a long time ago. And hopefully within the next quarter report, we'll be able to provide further details around the current status of that project. Just regards a little bit more around numbers in terms of the members impacted and what we've been doing about that to bring their records back to where they should be. Touch on the pension regulator annual returns. So last year's report weirdly was delayed because of McLeod, I suspect, and we didn't do it until January this year. You'll see there's some information on the data scores, which are very good, 95.9%, 96.79%. Slightly higher than they were previously, which is always good. We do have an exercise that takes place not just annually but regularly in the office, where we try to improve our data quality scores. We're always constantly reviewing the information that comes in from employers, so we have systems in place there to try and make sure that the score in theory doesn't drop and if anything could increase. We're expecting the pension regulator's request for the data this year any time, but by way of managing expectations, the scores might drop this year due to the fact that they're trying to include the McLeod data to be included in those data scores. And as I said, we're still working on the implementation on that. We're no different to other funds in that respect due to the late sort of publication of the legislation, which meant that the software solutions for that, how we record that data, were also quite late. And as I say, we are still implementing that as we speak. Which is unfortunate, but we've managed to get through a sort of large volume of work to sort of publish annual benefit statements and the like, so we keep sort of business continuity going at the same time. There's a little link there as well we put in just to sort of highlight what the pension regulator is asking us to keep in terms of records and how we keep those records up to date, just for any sort of interest. The final point is the cybersecurity audit review. I believe it was in the summary of the last report that around cybersecurity, an event relating to cybersecurity has been arranged for less than a couple of weeks away now, 25th of September, where representatives from our software provider, Hayward Pension Technologies, and Devon County Council will be present to provide reassurances and answer any questions relating to that particular area. So that's sort of a run through on the report. If anyone's got any questions, I'll I'm sorry, I'm not able to hear anything. I don't know if it's your end or my end, sorry.
Can you hear?
I can hear now, yes, sorry.
issues in timing because the information is not provided. And therefore, the how do we change that? Because obviously, if we don't change it, then we carry on saying
Sorry, the sound is very bad. Yeah, sorry.
Okay, apparently I have to get very close to the microphone. Is that any better?
That's better, yes. Yeah.
One of the comments you made was that the delay in getting information out was because it was delaying getting information to you, that you could calculate it. And the point you made that concerned me most was, in one case, it was over a month after retirement had happened before anybody was talking about what pension payments might be in how they were. Now that's really concerning, because if you are about to retire, you really do need to know. You're not paying your salary, you expect that, but you do expect to get your income, your pension income. So what do we need to do? Is there anything that we can put in place that improves the speed by which this comes? Because frankly, even one of our pensions not getting their pension paid on the due date is one too many.
Yeah, so the pension paid on the due date has always been a bit of a misnomer. It depends on if everyone's got all the information in line initially. So a lot of employers will be reluctant to supply information ahead of the final payment because they don't necessarily know what that final payment might be. So a lot of them err on the side of caution, and they will only provide those final figures once they are confirmed as final figures, once the final payment's been made. This has a number of sort of assumptions behind it, in that if there are sort of additional payments to be made, they've already been captured in the final notification to us, and we're not then doing recalculations of pensions, which has often happened. So it does depend on the employer. It depends on the payroll systems as well, as to how they're set up and equipped to provide that information to us. So it's by no means unique to the Somerset Fund issue. It is across the board, and it is a sort of national issue as to whether employers are prepared to sort of stick their necks on the line and provide that information early, with the assumption that those figures might change anyway, because they're assuming that the pay is not going to change in that period, which for the bulk of people it generally doesn't if there's no sort of additional bits being included in it. But with the regulations the way they are in terms of the calculation of care pay, the career average revalued earnings scheme, essentially anything you pay to the person is pensionable. So depending on what they're being paid, it might have to be included for pensionable pay purposes. So a lot of employers are reluctant to commit that information ahead of time. We do continue to work with employers though, so that where it is just a sort of normal scale point payment, those can be notified ahead of time. But often you are relying on the payroll provider as well. This is the other assumption, that they have been told in good time so that they can implement their sort of process to ensure that pension information is provided in a timely manner. And some of them aren't. We lack that data in terms of the sort of 32 where we've received notification after the retirement date. How many of those were because of payroll receiving late notification of the leaver? Obviously, there are timescales and payroll cut-offs for each employer and each payroll department. There are implications there to be sort of discussed. So we are working with employers. This is a sort of ongoing project that we have to reduce the arrears, and we are using technology now sort of via interfaces to shift this information around a lot quicker, so that as soon as it's available, it's effectively onto our system and we can begin sort of working on it. But it is a sort of industry-wide issue. There are very few sort of employers who would commit to sort of doing supplying me the retirement information, say 3 or 2 months in advance. They're not that keen to do that because of the recalculation issue, which in itself can have implications depending on what further benefits the member may possibly go on to have entitlement to. So for very small pensions, for example, they may wish to do a trivial commutation, which if we have to recalculate that based on an additional pay award, they may suddenly be outside of the limit to have a trivial commutation because of the additional amount. So it's just, we'd rather sort of do it all in arrears and get it right than try to do it in advance and possibly encounter those sorts of pitfalls. So it's a tricky area, but we are trying to work on it.
Thank you for that. Can I seek some reassurance that we are making all are members aware of the potential delay and the reasons for it? I understand the reasons for it, but obviously, as I said earlier, if you're due to retire on the 31st of September, then you need to know what your retirement income is likely to be. Or it would be beneficial if you knew what your retirement income was likely to be. Can I seek reassurance that members are fully aware of the potential delays to them receiving their pension?
Yeah, so via the website and via the member self-service portal, which is now sort of transferring to Engage, we do make members aware of the expected timescales that they can expect to receive information from us. But again, it's based largely on us being told that they've left. So oftentimes members are encouraged to come forward and prompt us to say that I'm leaving on this date, and therefore we can be proactive in obtaining the information that way. Obviously, that only sort of works if they're engaged with us already and on member self-service and not being told by the employer that, oh yes, everything will be taken care of. So once again, we are trying to work with employers to make sure that people do come forward to do that. They often do anyway, because we wish to provide them with sort of estimates within, at least one estimate within 12 months of their retirement date, so that they have those figures anyway. But again, they can self-serve and do that on the member portal, and the results are often captured this end on our data, so we can then sort of target those members in that sort of way as well. So that the technology is evolving in that regard. With the sort of new Engage system that we purchased from Hayward's, and we're beginning to unlock that with the things like online retirements, where people can actually do the bulk of the retirement themselves online. There's no need to sort of produce forms and send them to them out in the post, that sort of thing. It can all be done remotely online now, and we've used the sort of online refund process that we've had going for about a year and a half now. We've extended that now to online retirements, and it's about to go live, I think, within the next couple of weeks. So we're constantly making strides in that area. And from our knowledge, we're the only sort of fund in the country who are doing online retirements. We've designed that process ourselves with the help of Hayward's, because the main sort of Engage system that they've developed, the online retirement facility there, will not be developed for at least another sort of few quarters. So we're trying to get ahead of the game there and make sure that we are able to make those sort of offerings to members so that they can self-serve where possible.
Two members wishing to ask questions about Councillor Farber, I followed by Councillor Collins.
Thank you. You mentioned cybersecurity towards the end of your.
Sorry, can I just interrupt? I'm not sure if it's me, the sound again, but I'm not really hearing that. Sorry.
Can you hear me now?
I can hear you now. Yes, sorry. Yes, there we go.
You mentioned cybersecurity towards the end of your presentation. Now, is this precautionary as far as we're concerned? Because I know cybersecurity is impacting us more and more these days. Or is this done due to the fact that we've been impacted due to certain areas being exposed?
It's proactive. Obviously, our database contains a lot of information, personal information and payment information. We need to have the highest levels of security we possibly can in place. I don't think we can justify not doing that. That's why we are partnered with Hayward Pension Technologies and the Altair system. It does have, they have all the accreditation in terms of Cyber Essentials, the ISO 27001. It's the best we can possibly get, because we don't want to be in that situation where something happens and we found there was something we could have done to have mitigated or completely eliminated that sort of line of attack. So it is about trying to be at the edge, if you like. If the technology is there for us to utilize, we need to be utilizing it to protect members and protect the database that we have, as well as the various sort of systems that we have. So that is the idea behind it. Is very much sort of proactive as opposed to reactive. But in cybersecurity, you're learning all the time. Things are evolving all the time, and therefore, we're not experts on that. That's why we incorporate. We very much take whatever products are available from Hayward Pension Technologies.
Okay, thank you for that. David Fothergill.
Thank you, Chair. So I think my question is very similar to yours in the same area, but so it maybe comes more as a statement than a question. But just looking fresh at these, having returned to the committee, I am astonished by this, by the fact that a third of people are outside of not getting their pension on the day that they retire. And you read it, 32% of retirement notifications receive more than 1 month after date of retirement. That means that they retire, and for 1 month they get no pension, and probably for 2 months they might get no pension. We're talking about people here that are retiring without a pension. And I think we've underplayed this one, because I think if I was one of those 32% of people retiring, I'd be pretty
concerned.
That's the word I was looking for. And I do stress that if that is the case, we really do have to put a red flag for some people somewhere to say that there is a very good chance that you won't get paid for the first 2 months of your retirement unless your employer starts to process this on time. It's a big concern.
Peter, you need to come in on this.
Yes, Chairman, I'm just wondering if this is people deliberately choosing to cease employment before they turn their pension off. Are we trapping that group into this number?
I don't know the answer to that. Do you know the answer?
I'm not sure if the 32%.
Sorry, the performance summary says, sorry, I had it a moment ago. Right, the average for Q1 period to April 2024 to June 2024, item 4, 23% of retirement notifications are received in advance of retirement, and 32% of retirement notifications are received more than 1 month after the date of retirement. That's the concern.
Shall I just highlight the figures in the high priority cases table?
Yeah.
So over the whole fund, retirements for those who were employed immediately before retiring, 95% paid within the deadlines of the disclosure reg statutory requirements, and 84% are dealt with within the 10-day working days from receipt of all information. So Peninsula Pensions are turning these around relatively quickly and doing everything they can. I'm sure they would like to improve those numbers, but they are, and the retirements deferred are slightly better numbers, helped by the fact that if you are a deferred pensioner, they don't require any information from an employer. So they are turning these around in an acceptable manner. I think, mid 90% within the regulatory requirement is pretty decent, not without improvement prospects, but so yes, there are pockets of problems, but the overall numbers I think are slightly less concerning.
David.
It wasn't meant as a criticism of Peninsula or anybody. And the criticism is, I'm looking at it purely from a retiree's perspective, which is, I'm a teacher, let's say, and I retire, and then suddenly I don't get paid for 2 months. That's my concern for the individuals, and there has to be surely there has to be some work done in this area to make sure they are, or at least warn them so they can hold things over.
So we're doing that.
Is this a particular problem with academies? Because I know I've seen this elsewhere with other authorities, that most of the problems they have with data is from academies because their payroll systems aren't very good.
Okay. Do we have an answer?
Sander, do you have an opinion on that?
There are issues around their payroll services and their procurement, in that pensions are often not even on the procurement list in terms of, how do these systems provide that information? How do they calculate that information? So that some providers we know are actually manually calculating our pension leavers information. We provide them with spreadsheet templates for them to populate to do that, because they simply don't have the capacity within their IT software to do that. We try to liaise with these employers as much as possible. There are regular bulletins going out on a monthly basis to urge them, if they are going out for procurement for a new system, that the pension requirements are very high up the list. I know that some major employers have had to take very expensive retrospective action to have external third parties come in and program their software to be able to provide this information in a timely manner. We are also developing internal employer reports. I think in this report we actually allude to those being available shortly. They should have been available from April. We're having some IT issues trying to get those up and running, but we have them in here, and they do sort of provide performance reports in terms of when that data is received, how late it is after the date of leaving. And that is part of the pensions administration strategy to look at that and work with employers. There is a last resort of fines. There's always a carrot and stick involved in this sort of thing, but in the first instance, we try to work with them to make sure that when they are going to get software, that it deals with this. We have had some that come to us simply buy it off the shelf and said, "Oh, don't you use iConnect, for example?" We said, "Well, no, it's not particularly in our interest to have you sort of throw data onto our system without us vetting it, because administrating authorities who have used that sort of system, for example, have had to employ double the number of people they had previously on their systems teams to go through that data and verify it, because it's just simply not up to the standard that we expect it to be." So there are it is a very sort of complex area, unfortunately, and there are a lot of sort of factors in it which, although beyond our control, we are seeking to influence our sort of partners within the sort of employment areas, the payroll providers and HR sections, to make sure that pensions is much higher up the agenda for these sort of people, to make sure that, when somebody does retire, that we need that information in a timely manner, because what are they supposed to live on? Sort of, fresh air. We appreciate that. It's something we're acutely aware of. We do try to, where possible, intervene with members to ensure that their expectations are managed with regards to when they can expect to receive that information. That's all sort of published on the website and on the portal, and we try and target people, as I say. And we do try and work with employers, but some employers are excellent, but they will turn around and say to you that I'm only getting this after the payroll's been run, so there's nothing I can do about it this month. Technically, they've overpaid the person. They've got to sort that out first before they can provide us with the final pension figures. So it's a really complicated picture, and it is something that we do take. It is one of our highest priorities in terms of how we interact with our employers, and we are. We are actively trying to drive those figures down, as I say, by unlocking the online retirement portal to at least cut out the amount of time that we have to spend interacting with the members. So if we can pull back some of the arrears that way, we're desperately trying to do that and investing to do that. But in the first instance, there's a lot of employers, I think it was alluded to academies there, perhaps the guiltier parties who do not take the pensions responsibility potentially as seriously as they should do. I'm not by any means trying to throw our employer colleagues sort of under the bus there in a manner of speaking, but we do need to work much more closely together with some employers who we know don't engage. Obviously, as I mentioned before, we send out those bulletins and communications on a regular basis. We do know who reads those, we do know who don't read those, and we do try and reach out to the ones who aren't engaging to make sure that that problem is addressed and that they are aware of their responsibilities in terms of reporting that information in a timely manner to the pension fund.
Okay, thank you for that. I'm confident you'll be asked these questions regularly.
Chair, just to provide a touch of context, the Somerset Fund, we have about 200 employers, active employers. I presume on the basis that Devon is roughly a double the size fund of ours, that then they're sort of heading up towards 400. So Peninsula are trying to deal with around 600 employers. And there will be a wide variety of how well and how organised those employers are.
David?
I get that and I understand that. From a personal point of view, for those individuals, that's completely irrelevant.
I remain confident this question will come back and back. Sorry, Paul.
Just a question around the impact of McLeod. Obviously, I understand how complex that is. I understand that a lot of the performance is outside of your control. But by incorporating it into the statistics, are we going to lose any sort of meaningful performance benchmark because it will always just be clouded by McLeod and we'll lose the trend analysis?
This has been put to the TPR. It's also been put to GAD, who in January, in their wisdom, or I suppose in their own choice, wanted to have the valuation data to include McLeod as well. And at that particular point in time, they knew full well that software providers were struggling to provide the software that we could use to accurately record this information. I'm happy to say that Hayward Pension Technologies are more or less at the forefront of this. They are one of the more up-to-date ones, there are software providers who have said you're not going to get anything until January. I don't know how they're going to meet those GAD requirements. They'll probably have to talk to GAD and say, we can't provide it to you because the software simply won't do it. So it is very complex. TPR have asked for it to be included this year. We await. We've just seen. I think the latest technological specifications have been released into our system, or we've been doing some testing on it. We haven't got any results yet because we haven't actually managed to get the process to run fully. I think we tried it the other day and it ran for about 12 hours and seemed to fall over. So we're trying to sort of, again, fight a sort of rearguard action in this regard, in that we're being sort of imposed things that we're not really ready to do just yet. I think from the government's perspective, they're saying we've had plenty of time. It's been nearly a year. But from a software provider's point of view, the lead in to develop this sort of stuff is usually years. And what a lot of software providers have been able to turn around in that time is something that I can't kind of fathom, because they're not just doing it for local government, they're doing it for police and fire, which, if you think local government is complicated, police and fire is a whole other universe, unfortunately, with the rollback and everything else that entails, and the contribution adjustments you have to make for those members. And yes, Peninsula Pensions, so it's not immediately relevant for Somerset, Peninsula Pensions does host police and fire schemes as well. So unfortunately, we have to sort of cope with it across the board, and we've seen the issue that the software providers are having. That's not to mean that we're completely on ourselves helpless. We've been able to develop external calculators in spreadsheets and things that have been able to ensure that we continue to do business as usual. I suppose the issue for us is, now that the reporting is coming round, we are going to struggle potentially to hold this information in the right way that GAD and the like are expecting us to report it. But we remain confident that now that we've got some stuff from Hayward in the system, that we can sort of put the round pegs in the round holes, so to speak, and hopefully get out some meaningful sort of data. But yeah, McLeod is all changed in terms of TPR reporting. We did raise this with them last year, in that there was a whole cohort of police and fire members who weren't on their website in terms of their categories. We didn't know where to put those remedy people. We did ask them, where do you want to see these guys, in this scheme or that scheme, because technically it's a whole new scheme. They didn't seem to be prepared for it either. If I'm going to sort of poke a finger there at TPR, it didn't seem to be sort of clearly thought through in that regard either. So yeah, it's a bit of a fudge. I think this year they're more organised with it, but the timing, as with many of these things, couldn't really be worse. But as I say, we've got something in the system. We've started to run those reports, and as I mentioned in the report, we expect the TPR request for the returns this year at any moment. So we're going to have a very good go at providing that information. Again, we're in no different position to other funds who use the similar software. So if anything, I think we're a little bit further forward than some funds in terms of how we've implemented it. We have had to wait for a lot of the issues with the software to be resolved. Obviously, with the releases, there's been errors in testing we had to do to correct that. So some funds have got stung a bit in that regard. They went ahead and applied things which they've had to sort of go back and try and undo, which has been unfortunate. But we've taken a much more cautious approach, to the extent that if there are errors, we've not chosen to proceed with those updates until they've been resolved, which just seemed a bit more logical to us. Again, we have something like 200,000 active scheme members on record, so it's a bigger problem for us to try and undo if we did go down that route. So it's reaching a sort of culmination now, and hopefully we're in a position where it won't be too much of an issue. But numbers can be provided at the next meeting on that if they're required.
I think it's a good idea to see those numbers in the next report, if we can.
I'll make a note.
Okay, thank you. Colleagues, any other further questions? Okay, in that case, I think I'm going to move us on. So thank you very much, and we will hold your report at our next meeting.
Thank you.
Thank you. Okay, ladies and gentlemen, agenda item 8, please, which is the business plan update, which is pages 49 to 56 in your information pack, and it's Anton to lead.
Thank you, Chair. As usual, just a few words about sort of things that have been going on since the last meeting. This is usually where we raise them. I would say that government has been relatively quiet since the last meeting, certainly on technical matters. However, I did send you an email after I drafted this paper that a new consultation has been launched by government, and I will come back to that in a minute. The other thing I'd like to update committee on is the external audit that is ongoing. I got their first draft of their audit findings report this morning. I haven't actually read it yet. And that will be going to the, I'm expecting it to go to the audit committee of the council on the 30th of September. There are some findings in their report. Some of those relate to the implementation of Microsoft Dynamics as the pension fund's main general ledger, similar to the main Somerset Council. There are a number of adjusting items to the accounts. They've been good enough to list them all. A certain number of those are typos, errors, things like that. There's only one substantive redraft that we've had to do, which is £10 million was incorrectly shown as realised gain when it should have been realised, sorry, as we put through an item that was showing a £10 million realised loss. So the realised gain figure will increase by £10 million, but the unrealised gain figure right next to it will move by an equal and opposite amount, such as the overall impact is zero. So that's the level of the main adjusting item that we've got so far. So I'm expecting a relatively clean audit report. Quite happy to take any questions on that quickly. Obviously, we do have the annual report, which includes the accounts as a later item. So any specific questions about the accounts themselves, I will pick up there. If not, I will talk briefly about the government consultation that's been launched.
Okay, I'm not seeing anybody online or in the room wishing to ask you questions at the moment, Anton. So if we move on to the consultation.
So the first thing to say about the consultation is that it was launched last week, and the deadline for submissions is the 25th of September. So we've got about another 10 days well, so 8 working days, I suppose it's more pertinent, to draft a response should we wish to. The scope of the consultation and the questions are very open-ended. So they are not sort of asking specific questions about specific things. Quite a lot of them are sort of, what's your broad views on something that's a very wide topic? I'm not sure whether the shortness of the consultation period means that, as with many of these things, government has probably already decided its approach, and maybe something is going to appear in the budget statement at the end of October. So this is an exercise in sort of being seen to consult. I don't know. So I suppose the key questions for the committee are: 1, would they like me to draft a response on behalf of the Somerset Fund?
Yes.
2, then what I shall try to do is get something to you for middle of next week for discussions via email.
Yeah.
Because in the time frame, that's the only way we can do it.
Absolutely.
Are committee happy for me to draft broadly in line with the previous consultation, where we are sceptical about the benefits of further structural change within the LGPS?
Yes.
And possibly sceptical about being told where and how we should invest our money?
Yes.
I've heard from the chair. Is there any dissenting voices? I will seek.
No.
I will seek to draft something
We look forward to.
as best we can. I mean, we've also, I should update, we did have a discussion at the Brunel Client Group. So me and my equivalents, earlier this week, we had a meeting already in the diary. We did discuss the possibility of doing, one response on behalf of all 11 of us, so the 10 funds and Brunel. There was sufficient scepticism that we could get that to work in the timescales that was not taken forward. So we will all be doing slightly different and slightly individual responses. But I think there will be a considerable amount of overlap in certain areas.
Yes, I think that's inevitable. Might I ask committee members, when you receive the draft from Anton, if you can comment on it as quickly as you are able, because we have a very truncated timescale. I realise it's not ideal, but we are where we are, as I say, and we do need to make our response. And I believe it's the right thing that we should make a response and make government understand how we see this potential reorganisation, just as we've got through the last reorganisation. We had a comment earlier that the Brunel position is now that we are saving some money. We're starting to see those savings actually come through to the fund, and almost immediately, there's a suggestion that we need to do it all over again. I'm not convinced at all that this is a wise and sensible move forward. However, we will have a number of views expressed, possibly 11, from this area. And I would welcome all your contributions to that, please. I'm sorry to impose on you, but I think it's an important thing that we are faced with. Peter, you want to come back?
Yes, I think in this particular case, the phrase I would use is not an efficient use of public money.
I would not disagree with that, but I haven't seen Anton's report yet and his suggestions. But
on the basis that specific phrase was in the previous consultation on these matters, I'm quite happy to do my best to transport it across.
Thank you. The civil service language usage is noted. Thank you.
I will just for the record also point out, if I may, Chair, that when we set up Brunel, one of the government requirements was for us to do a business plan for 20 years.
20 years, yeah.
Which is nice if we were actually allowed to deliver against that over 20 years.
I agree. I think all this rapid changing is not helpful. But that's a personal view. Does anybody else on the committee have a comment or anything they wish to add to this discussion? I'm not seeing anybody. I'm not seeing anybody online. Caroline.
Could I just say, I think the one thing to get important in here, I'm sure you will be thinking of it anyway. The government do not seem to understand that the pension fund and the sovereign wealth fund are different things. And I think that needs to be emphasised.
I'm sure it will be.
Noted. Is there any other questions about the work plan or any suggestions for the work plan before we move on?
I'm not seeing anybody online. I'm not seeing anybody in the room. So I think it's recommended to move on.
Move us on.
We will now move on to item 9. Which is page 57 to 62. So we're back to Anton again.
Thank you, Chair. So it's the usual update on member statistics and financials within the financial year. There's nothing specifically strange or odd happening with the active membership, etc. Trends we have seen in the past are continuing. I suspect we will need to just see what happens to that active membership line as Somerset Council moves through its reorganisation programme through the rest of this year, because that may see some change to that. Somerset Council makes up, depending on which metric you use, makes up about 60% of the fund. Moving on to the financials. So this is the outturn for the first quarter of 2024-25. For the first, pretty much the first time, we have been able to get out of Microsoft Dynamics data for the quarter just as passed, which is pleasing. I think that the variances we are seeing in certain areas may well be due to the currency of that data, as opposed to a significant change in underlying activity. So, for instance, we seem to be well under budget in payments for recurring benefits. I'm pretty sure that's not actually that we paid out sort of nearly 9 million less than we were expecting to in the first quarter. It feels like, especially as 9 million is roughly a third of the 27 million budget, that feels like we've only got 2 months worth of data rather than 3. I have made some adjustments to the projected over full year figure. We're certainly seeing a higher level of lump sums on retirement than was budgeted for. We are seeing a exaggerated level of transfer values out. Both of those would be consistent with employees changing job or retiring, and therefore the VR program of the council, the change, the unitary, the restructure as it's going through its motions, those don't feel like surprising things. The investment expenses are higher. This is partly a process of me providing you with a projection for this financial year before I'd seen the outturn for the previous financial year. And so having seen that previous financial year's outturn, I now think that we will see a significantly higher level of investment management expenses. Some of that will be linked to Brunel's levels of expenditure, but most of it will be linked to the fact that fund managers charge a percentage of the funds under management, and we've just got more money in the fund than we thought we would, so the expenses are higher. And also investment income is expected to be higher as well. We're continuing with a slightly higher level of base rate than perhaps we'd forecast. And also we continue to get slightly more income from the property unit trust than we perhaps thought we would. That's the only comments I'd like to make in advance, but quite happy to take questions.
Okay, well, the first question for me before I open it up is, when do you think we will have accurate information? Because I'm concerned that you're telling me that you don't think some of these figures are actually accurate.
It's not that they're not accurate. So there is always a slight lag between the point at which money passes hands, so the monthly pension payroll, and it being recorded in the financial system. And when you get a new system, inevitably for a period, that takes a bit longer. Staff getting used to new ways of working. We also have a short-term issue in terms of filling a post that will create additional capacity to speed that up. So I can't answer that with absolute certainty. I am certain that when we get to year end this year, we will be more up to date than we were at year end last year.
Well, I'll take that as an improvement.
We are moving in the right direction.
But I am concerned that you're telling me that 1 quarter you appear to think you've only got 2 months data, which is, I think, quite concerning.
Yeah, and some of these things, so when we run the report, we run it to say what's been included in the first 3 months of data. So if something's posted after that 3rd month is closed, although it may be in the system, it would be recorded in month 4. So some of it's how we try to extract data.
Okay, all right. I'm wanted to keep a sharp eye on that. I'm going to open it up to the committee now, and Peter C. caught my eye first. Peter.
Yes, I'm afraid I want to push back a little on that. The actual purpose of the report is to record the transactions which are instantaneous. And if the reporting system trying to measure and report on those transactions has a latency, I think the report should reflect that latency, and indeed we should address and minimise the latency, because ultimately we want to give an accurate record of the period. And if some things haven't been entered, we should be putting a note against it saying these things haven't been entered. Or better still, we believe there is a liability of so and so that hasn't been recorded in this report. And we should, I think we should caveat what we say if there are concerns. I also think that that in principle we should be pushing the Chief Financial Officer to give us a live view or a very near real-time view, because ultimately, the measure should be precise. The measure should be at an instant in time when a transaction is taking place. The fact that it takes a while to feed through systems and come back shouldn't change the timestamp on it. I just think that there may be a bigger issue which we need to get after, because we can't afford to go over committing or under committing or over reporting or under reporting, and we certainly won't be trusted if we vary.
I don't disagree with that, but Anton?
When I was running these reports using the old system, I fully understood, because that system had been in place, what the latencies were likely to be. And I included that in my profiling of the expenditure through the year. Yeah. I have neither gotten sufficient experience of the new system, nor do I believe that we have reached a steady state such that I can profile in such a way. So I'm learning as I go as to what to expect to see out of the system. But as I say, I don't think we've reached the point at which our processes are as good as they can be with the new system, such that we've got a steady state to build on. I don't see why we shouldn't be able to get this such that it doesn't work properly. That is my expectation. We're just not there yet.
I still think caveating would be important. Peter?
Yes, Chairman, if I could respond. Firstly, I think we're in agreement. Secondly, that has reminded me, of course, the reason why there's an apparent gap may not be because there's a gap between these numbers and the truth. It could be because the old system had certain lags in that are not present in the current system. We don't understand that. But equally, I'm very well aware that an experienced officer such as yourself would have anticipated particular behaviours of one system, and this is a new system.
I fully appreciate that until the new system is actually embedded properly, it will be difficult. But I don't think that precludes us from caveating if we are concerned about the timestamps and the accuracy of the data.
I suppose one of the other things I'll point out is that responsibility for the officers who input into the system historically was not within my management purview. From the 1st of April, it has been. And in the short term, because we've been shifting people around and sort of weaning them off old tasks for old teams and weaning them onto tasks, and I've got vacancy. But yeah, it's not led to an improvement in performance in the short term, but I am becoming more and more aware of how to get that sorted through time, and I will get it sorted. Give me time. I am on this. I do know roughly what I need to do, and some of it is just capacity. I need that extra person so that I can catch up and then start improving as well.
Yes, and that is much appreciated by all the committee, Anton. David?
No, I think
Sorry,
Paul's got a question related
Paul.
to this.
Fine, then I'll come to you, David.
Thanks, David. I'd just like to thank Peter for holding our feet to the fire on this one. I think we've referenced this pretty much since I've been on the committee, and I understand the answer, but I think it would be remiss of us if we didn't get some assurance. And there's always the danger, whenever you're light on income, you assume it's income lag, so you scrabble around and look for it, and when you're high on expenditure, you assume that there's something wrong and you look for adjustment. It's easy to look for an adjustment through the profiling. I think that this is a material difference which we should have some confidence in the explanation on, and I think we should ask the CFO to just provide us with a reassurance there on the rationale for the difference and why, as Peter says, transactions of time stamped, if we're producing this after period end, why it isn't appearing where we would expect it. So I think if we could just get a statement from the CFO, it would cover our responsibilities in this area.
I won't disagree with any of that, Anton.
I'm happy to speak to the CFO, but the CFO will rely on what I tell them, because they're not looking day to day at where data is. So I have meetings with my staff. I know which of this data is absolutely up to date in terms of input, where there's lags, and that, and as I say, that recurring pensions one, I need to investigate perhaps, because I thought that data was in the system. So I don't know if that's just, it's lagged always a month behind what I think it should be, and therefore I need to reprofile it, or it's
Like this one.
just late this month. Yeah. So as I say, if you want something from the CFO, that's fine. But in terms of granular detail, I'm inevitably closer to this than the CFO, especially as the CFO has only actually been in post for 13 days.
Yeah, okay, but that's, that's true, and we do understand that. But also, the purpose of this committee is to make sure that we are on top of things. And I think that there's a very clear request from this committee that we remain on top of this. Acknowledging it is one thing, staying on top of it is another. So thank you, and we look forward to that in due course. David.
Thank you, Chair. Totally different point. So transfers out, that seems quite a high figure for the year, the figure there. And I just wonder, in another scheme that I operate in, we've seen an increasing number of single members transferring out and into drawdown. Is that what's happening here?
Not necessarily. So a portion of this will be people moving between LGPS funds. So if I get a job at Devon, then I will typically transfer out my Somerset pension into the Devon fund, because it just keeps it all in one place and it's simpler. So certainly if you are moving employment to another government entity, be it LGPS or civil servant or whatever, typically people will shift their pension because they'll get, it's easier, it keeps them the same rights, the same government, broadly government guarantee, just makes sense. Sandra referred to it earlier. So we do get a level of people who wish to transfer their pension out to a different arrangement, a DC arrangement. Some of that will be because they've got a trivial amount and they just want to keep it amalgamated. Some of it may be because they wish to access their funds in another way. As Xander referred to earlier, when they do that, we are obligated to require them to demonstrate that they have taken independent financial advice and do certain checks to ensure that where we're sending that money is a genuine pension fund and not some scam. So I'm not saying it's not happening. I can't tell you, obviously, from the finance system where transfer outs go to. It's not data that we record in this particular area. I'm not sure it's something that Peninsula would record per se. But we are, as I say, my suspicion would be that most of it is to do with a greater level of movement of employees, particularly of Somerset Council, as we adjust through this phase, rather than a significant uptick in people moving into DC, but there will be a level of that. I don't know if Xander wants to, Xander's got his hand up, so I'll let him sort of.
Please, Alexander.
Yeah, sir.
Yeah. If you wanted those numbers, we do have them. So we can split them between what we call interfunds, which just simply go between LGPS. We can split them between what we call public sector club transfers, where it's gone to civil service or whatever. And we can then split them between those that have gone to private DC ones. So numbers are available.
We would like to see that in future, please, because it's of interest.
I think the concern is about the ones out of scheme.
Those out of scheme, and we
out of public sector.
Out of public sector, yeah.
Yeah, and those are the ones that do generate the complaints because we're forcing them to go down the financial advice route, and they complain about the time it's taking to do that, but it is something that the TPR requires to do.
And quite rightly that the TPR requires us to do that. There are unscrupulous people out there that will take your pension away from you in a nanosecond. And the TPR regs are absolutely there for a very good purpose, but I think it would be beneficial for the committee to understand what the quantum of this is outside of government pension schemes of one kind or another.
I think that figure's just being masked at the moment.
I
because
agree.
we have transparency.
Yeah.
Okay, we can do those numbers. That's not a problem. Sorry, I didn't catch that. Was that?
To manage expectations, you can do that by value as well as by number of transfers.
Yeah, we can do that.
Okay, I think that's all we need on that. But obviously, when we see the numbers and have the discussion next time, we'll either be satisfied with the answers or we'll come up with other questions. Okay. I don't have anything else on that paper. Okay, then moving on. I'm not seeing anybody else with a hand up or the opportunity. Okay, so item 10 on our agenda is pages 63 to 70, which is our review of the pension fund risk register.
Thank you, Chair. There's been no changes to the risk register since the committee last met. I have no particular points I wish to raise on the risk register, but as ever, happy to take questions on any.
Colin, any questions on the risk register, which is effectively unaltered? Peter? Is there anything they no? Okay. In that case, we'll move on to item 11 on our agenda, which is page 71 to 82 of your pack, which is the communication policy statement.
Thank you, Chair. So you will recall that I unfortunately drafted this to the committee meeting in June, where we had a discussion, but there were no specific amendments that were requested. There was then a similar discussion at the board with an outcome. As is required by the regulations, I then circulated the draft to employers. gave them a period of time to comment, question, discuss. I believe it was 3 emails back from employers, and each of those was content with the strategy as presented. If the committee is content, ask you to adopt the strategy.
Okay, colleagues, comments, questions before we move to adopting that strategy? Those from the chair, those who second, please. Thank you, Peter. Those in favour of this adoption?
Thank you very much.
Moving on to item 12, which is the pension fund annual report, which is published as supplementary. And Anton?
Firstly, I'll apologise if it was a separate as a supplementary. There are complexities in drafting a 260 odd page document, and it just wasn't quite enough. Obviously, I will firstly just point out that those changes that I commented on from the audit process are not in the current draft given, so that is a to change amendment. And obviously, there is the possibility, as noted in the covering report, that further changes may be required as an outcome of the external audit process. The specific reason the paper is at this meeting and not at a later meeting, given that that process will continue, is that there is a regulatory requirement that I publish the annual report by the 1st of December. Strictly speaking, I did it in draft form, being in these papers. It is now published online on our website. So we sort of met that box, but obviously there's also a requirement to formally adopt it. And I will do so at this meeting. Then there is a request for delegation to the chair for minor updates should they become relevant through the life of it until it's finally published in final format. Obviously, if there are significant changes, I would at the very least discuss those by email, and depending on how the timescales work relative to the next meeting, I'll bring it to the next meeting. I should also point out that it will not be in final format until the external auditors produce their audit opinions of the pension fund. External audit, for reasons that I still struggle with slightly, insist they cannot provide those opinions if they have completed the audit at Somerset Council. So I'm not necessarily expecting those audit opinions anytime soon. It's my understanding that there is new regulations that audits of local government have to now be completed by the 28th of February. I think that's only come out in the last week or so, so I'm not fully on top of the detail because I was focusing on producing your annual report and the audit work. So it's certainly, I think the chances of those audit opinions being available before the 1st of December so that we can publish it in its final format is somewhere approaching nil. But I will do it as soon as I can thereafter. Within the covering report, I highlighted metrics to bring some various things to your attention. And obviously, the annual report in itself is a very long document. A significant part of the length, about half, is a copy of all the policies you have previously adopted. And therefore, I wouldn't necessarily encourage you to review them as part of the work. But obviously, I'm quite happy to take questions on any part of the document. Colleagues.
can make sure that is checked for obvious reasons.
I'll need to check that because you stood down, so you shouldn't have. You weren't due to attend the March meeting. Is that correct? Or was it the June meeting?
The figures moved. I can't remember exactly what it was, so I stepped down. So it just needs to be.
It's just June. I'm being told by my colleague in democratic services it's just the June meeting, so I will need to reflect that in next year.
And I'm sure you will know that. I'm sure you will.
I'll do my best.
If we can make sure that correction is made. And, okay, points. I'm going to move from the chair that we accept the report, Peter, and that we withdraw care to make allow minor operation. If there's any substantial, it will move. Okay, can I see those in favour of that, please? That's unanimous from the voting members.
Thank you very much. Should you subsequently find a detail in there that piques your interest, obviously, I'm happy to take questions at the next meeting that I can other business, or feel free to just email me at any time.
Okay, thank you. Now, that concludes the formal business. So I'm just moving to items 13, which is any other business of urgency. I've had none received from our democratic services officers, which is to talk to us about X.
Hello, everyone. So, yes, I'm talking to you about access to this building. We are going to be having these meetings at Bridgewater from now on. And the normal access cards that even our councillors have, that they receive from Somerset Council, do not work in this building. You have to get new access cards, and they have to be issued, so you will have a separate card to the one that you already have for Somerset Council. When you get this card, you have to have an induction into this building before you'll be issued with it, and that is an appointment with the facilities management, which they'll walk you around the building, and you have to make a formal appointment. And then you will be given a new card, and you have to provide your photo, etc., etc. However, if you do not wish to go through this whole process, you do not have to, because to come to the pension meetings, you merely need to come through the reception. The cards I've just told you about will give you access throughout the whole building, which you are entitled to, but it does have to follow that formal process. Otherwise, you merely come through reception into this room and leave via this room, or I can escort you out the building if need be, but which I don't mind. But I'm doing minutes and recording and everything as well, because due to the reduction in our team, we only have one officer that is available at every meeting. Previously, there were two. Yes.
The process we used to have at Bremerton White was reception had two poles, which was parts of the council, which gave free the building. Really easily identified every department except for in radio frequency. Simply have some blank cards issued to the visitor should we need to access the public area.
Susan?
Because frankly, I only normally need to make it to this room or the toilets, kitchen, and I can achieve all of those through the front door of the building.
You don't need a visitor's card to do what you just said. You can do that with, I don't think you even need to put in a card for the electronic access. The visitors' cards and all that, it's all to do with the fire warden and induction, and they keep going on about induction. It took me about 3 weeks, and they want me here for all the meetings to get myself inducted and our cards. So I would say rather just come through the front, easier, and if you need to be anywhere else, it's not going to be during a meeting. I'll help you get wherever you need to go. The toilets are that way. Yes, it's a super new. So can I officially, the chair?
Yeah, I'm just going to officially close the meeting. Thank you very much, one and all, for your attendance. Any problems, any queries, please get back to me.
Otherwise, enjoy the rest of your day and have a great weekend, everyone.